So, do interest rates even really matter for real estate investing? We've seen mortgage interest rates all over the board over the past few years, from historical lows in early 2021 to a recent peak at 8%. There's been a lot of fluctuation in the market. Holy smokes. And of course, this impacts the housing market in a number of ways. So, do interest rates really matter for real estate investing? Not just buying a home to live in like a primary loan, but I'm talking real estate investing. So, of course, the interest rates matter. They're an important consideration that you should factor into your ROI, your return on investment. But should a higher interest rate alone discourage you from reaching your goals? I say no freaking way. In this video, I'm going to share a few things that you should consider before you let rates dissuade you from investing in real estate. So let's get into it. The interest rate is only one factor in deciding if a deal makes sense or not. Now, if you can find a great property for the right price, you have enough money for a down payment, and the returns are good, then why would you let one number discourage you? Why would you let an interest rate discourage you? Consider how those other numbers, like the price, the returns, the impact, how it all impacts the deal as a whole. Having a slightly higher than desired interest rate shouldn't impact the overall merit of the deal. In fact, the interest rate is far less important than other factors like returns. I've seen people who weren't even, they had a great interest rate, but they didn't do their math. They didn't do their return on investment numbers up front. And guess what? Their taxes were higher than they anticipated. The cash flow was lower than they anticipated. Their repairs were higher than they anticipated. And their returns were garbage as a result. So the interest rate is really low on the list. Your returns should be way higher on the list. Let's talk about rates, because rates aren't likely to fall much more. I think gone are the days when we're back down to like 3%. I know a lot of people are holding out hope for that, but I don't think it's going to happen. You're not likely to see much variance over the span of the next year. Most analysts are forecasting that rates will hit around 6% by the end of 2024. If you're holding out for rates near pre-pandemic levels, you could be waiting years, if not decades, and it probably will never happen again. And then remember, refinancing later is always available. I know a lot of people don't like it when I say this, but it's true. You can always refinance down the road. If for some wild reason rates do reach record lows again, go out and refinance your property, because you bought the property knowing that your rates were a little higher, but your returns were good. You see, so now all you need to do is that refinance, and you're just increasing your returns down the line. Banks, specifically your hometown local banks, are always looking to do business. If they can lock you in for another 30 years with a refinance, they're happy to do so. Refinancing is very common in the mortgage industry, so just remember that that tool is always available to you as long as you're willing to pay closing costs in exchange for a lower interest rate. Prices are rising soon. As mortgage rates begin to trend down, prices are going to climb. This is inevitable. The question then becomes, what is more important to you, a lower rate or a lower price? In my opinion, the price is far more important, because like we discussed, you can change the rate at a later date, but the price is fixed. You can't go back and pay less for the house you just bought, right? You can't do that. The price is fixed, and buying sooner allows you to lock in equity when prices go up. Then let's talk about timing. Remember that market conditions are only one piece of the investing puzzle. The more important thing to consider is this: is it the right time for you to invest? This is really what matters at the end of the day. Consider your personal goals and your timeline, and let that be your guiding factor. So there you have it. In my opinion, interest rates are a factor you should definitely consider before you buy rental real estate, but I don't believe that interest rates alone should dictate whether or not it's the right time to invest. They're just one piece of your ROI equation. The most important factor is that you are ready to build wealth through real estate investing. If you are ready to take action, my team would love to help you assess your options. Our new construction rental properties are in the country's best landlord-friendly markets, and we work with over 200 lenders to help investors reach their goals. So come on over to our website and schedule a free 30-minute phone call with our team. Just go to morrisinvest.com. We'll have it linked up in the description below. I look forward to hearing your thoughts in the comments section below, and we will see you in the next video, which you should watch. It's right here.